What's going on, everybody? Welcome back to my YouTube channel. So for today's lesson, I'm going to talk to you about why I personally prefer stop orders over instant execution and limit orders. So let's roll the intro and let's get started. So some of you might be asking, what is stop orders? Well, stop orders simply mean you enter when the market is above or below your entry price and price crosses it. Now, I'm not Investopedia and I'm definitely not a dictionary, so don't expect the best explanation from me in terms of the terminology that's used. But as an example, let's say the market is trending to the downside and you're looking to take a sell opportunity at a key level in the market. Now, if you take an instant execution and price is right here, this is where the order will be placed. But with a stop order, you only enter the market or will be triggered into the market if the market pushes in your direction and taps or crosses where you intend to enter the market in terms of the price. Now, again, as I said, I'm not a dictionary and I'm definitely not Investopedia. But that's the finest example that I could give you there. Let's say the market's trending to the upside now, and then price comes back to make a higher low formation. You have multiple wick rejections in and around this level, and you plan to enter the trade. Now, if price was sitting here and you tapped instant execution, this is where you will be triggered into the market in this area. But if you use a stop order, because price is below your entry, the only time you'll be triggered into the market is when price pushes up and taps or crosses your stop order or the area where you intend to enter the market. Okay? So what's the point in this? Well, there's a few reasons. And one of the first reasons that I prefer stop orders is because I hate entering a trade and seeing it go straight to my stop loss. And what do I mean by that? Well, let's take a look at this example. We can see here on pound JPY, we have a very nice trend to the upside. Well, I wouldn't call it nice. I can just see that the market was moving up. And then eventually look what happened here. We had a strong momentum push to the downside and price now was putting in lower highs, lower lows. And we can see that price at this moment in time is failing to break below the structure or continue to push to the downside. So as a trend trader, I'm only entering the market when the market pulls back to a key level, because I only enter trades once price is exhausted, or as you may know it as, pullbacks. So I'm looking for price to come back to a key level. So let's say now I'm looking at this market structure and I identify that this was the low where price decided to break, come back and retest for a continuation down. I have a confluence that I can line up with this, that the trend is down, and if price comes back to this key level, is a previous area in the market where price is respected many times before, and also I can look at this as an area where prices create price action as evidence, and if price comes back, I can look for confirmation to take a trade. So with all of that plan in place, what I'm waiting for the market to do is come back to this level. Now, once price gets back to this level, what I'm looking for is for evidence of wick rejection and price failing to break above. Now, let's say I see this here in the market, see price is pushed into this level strong. We have a wick rejection and we have a strong bearish candle to the downside. Now, if I take this trade and I place my stop loss above this structure, let's just say we pop it above this level here. It doesn't need to be huge. And this is how I want to take this trade as an instant execution. I'm going for my 1 to 3 risk to reward ratio. I've entered this trade with a market execution or instant execution, however you know it as, and then I take the trade. So let's take the trade and let's see what happens. I get stopped out. Now, this is one of the things that I hate about trading, and that's entering a trade and seeing the market go against me. I much prefer to see price at least move a few pips in my direction or have one candle move in my direction and close, because personally it does a lot for my confidence and it helps me to build faith that the trades that I'm taking are good trades, and if they do lose or they come back against me, then just, you know what, it wasn't meant to be. But if I enter a trade and see it pull back against me and hit my stop loss straight away, I just kind of feel discouraged. So what if I took this as a stop order? How would I have planned this? Well, we know this instant execution hit its stop loss and fairly quickly. But let's just replay this again. Let's say I wanted to enter this with a stop order. And the reason for that is because I want to enter with momentum. So what I would like to do is I understand that this is a key level in the market. In theory, price shouldn't really break above this if this is a key level. We're putting in this double top and the trend is to the downside. So I want to enter this with momentum. Now, if the momentum continues to push down, then guess what? I have a higher chance of winning this trade because not only do I have a downtrend in my favor, I also have a key level in my favor. And for the final confluence, I will have momentum in my favor. Now, does this mean that it needs to win every single time? Well, no, absolutely not. But what it does do for me, it gives me a lot more faith and confidence and assurance that I'm on the right side of the market. So let's say now I enter this with a stop order. And the stop order simply means that once price crosses this black line or this entry point where I've placed my entry, so here you can see it here to the left, 138.95.5. Once the market crosses this level, then I should enter the market. So I set the stop order. As you can see, the market hasn't crossed it yet, and we haven't been triggered into the trade. Now, by not being triggered into the trade with an instant execution or being in the trade with an instant execution, I have avoided being stopped out of this trade. And that's one of the biggest reasons why I love it. Now, does it happen all the time? No, sometimes you will be triggered into the trade and you will get stopped out. But remember, I'm trying to add confluence to what I'm doing. That simply means that if I place my entry below, giving myself or giving the market an opportunity to breathe and push down strong with momentum or push up with momentum, it simply means that more often than not, I won't be triggered into the market prematurely. So I avoided a stop loss here. Now, what would I do in a situation like this? Well, I will simply just continue to wait. Now, the momentum starts to shift back in our favor. So what do I do in a situation like this? Well, I can still account for everything that's happening here. I don't need to necessarily change my whole level, but what I can do is I can join the dots. A key level where price is respected, here a key level where price is respected, and now we're having a momentum shift off of this key level. So what I thought was the key level because of the previous wick rejections obviously wasn't, but the stop order saved me in this instance. So now I'm just simply going to wait for the market to create new structure and come back to these levels. Now, I know how the market moves, right? In a downtrend, we make lower lows and lower highs. If I start to identify that the market is now creating a reaction from this level and we're starting to get wick rejections, then potentially there's a high chance that the market is going to continue down. And as you can see here, we have that momentum shift. But you might ask, how would we enter this trade? Well, what you have to do is you have to identify how the market is reacting in terms of its behavior at these key levels again. And let's say now you see the market giving or print in a very strong wick rejection. There's two ways you can enter this. The first one is pretty aggressive, which is below the previous candle and your stop loss above this level here, targeting your 1-to-3 risk to reward ratio trade. Now, I personally go for 1-to-3 all the time, well, more often than not, should I say, because it's just a number that works very well with a break and retest strategy, especially using the lower time frames. So this is your first entry, giving yourself enough evidence here and building up enough confluence to warrant taking this trade. A downtrend, a double top, huge wick rejection. Now, this candle has closed strong with a wick rejection. And what are you looking for? Well, you're looking for the momentum. The only time you're going to be triggered into this trade is if the market pushes down and crosses your entry, which sits around 38.97, and that will be entering with momentum. Let's take a look. Now, the second thing you could be doing in an instance like this, if you plan to enter this trade, is you can say to yourself, I want to be a little bit more conservative. So as opposed to entering at the bottom of this candle, I want to enter the market once price takes out the structural low. Again, you can pop your stop loss above this structure, it's completely fine, and then you can go for your 1-to-3 risk to reward ratio target. So again, same kind of theory, entering with momentum, but in this instance, you're just being a bit more conservative and you're waiting patiently for the market to take out the lows. The first one is to take out the candle low, the second one is to take out the market low. So you enter this trade. Now you've been triggered in what would be your more aggressive entry and then your more conservative entry. And then that's it. Now the market can come back against you. You can be stopped out for sure. And the market could trigger you in and go back to your stop loss. But what we're doing in an instance like this is we're making sure more often than not that we're on the right side of the trend, we're on the right side of momentum, and we're on the right side of where price is reacting to in terms of the key levels. And this is one of the major reasons why I love stop entries. Let's take a look at another reason. So the second reason why I like stop entries is to avoid the impulse trading. Or should I say removes impulse trading. So let's say I'm looking at the structure of this market and I can see price putting in here a lower high. Now, as part of a downtrend, you have lower lows, lower highs, lower lows, lower highs, and I want to enter this trade. Now, let's say I enter this trade with an instant execution. I'm not sure why I would, but let's just say I did, and I wanted to take this trade. What I want to do using stop orders is make sure that I'm entering the markets with momentum so that I can get on the right side of momentum and not have to sit in my trades too long. Let's say I enter this with an instant execution. Now, here, this is the hourly time frame. Right now, we've been sitting in this trade for, let's say, 3 hours now, okay? Now, this is a lot of time to be sitting in a trade. Personally, I don't want to have to wait 4 hours for the market to move. Because one, it builds up a lot of anxiety. Two, you get emotionally involved in the trade. And three, I just personally don't think it's good for human psychology because one, we're not even built to be doing this in the first place. Okay, so how would I have entered this with a stop entry? Well, what I would have done is I would have waited patiently for the market to create structure that resembles a strong key level in the market. So let's say now this has been formed. Let's say the market has created structure and it looks good to take the trade. What I personally would like to do is see the momentum shift below this key level here, because this is a key level, and if you're trading the lower time frames, this will be classified as either a range or a major low or a low in the market that price will eventually need to break to continue this trend to the downside. So I prefer to do this. Now, if I was taking the trade like this, what I would do is I would add an alert. Well, I can't do it in replay mode, but let's just say now we add alert here, and I prefer to set this up and walk away. Now, the only time I'm going to get triggered into this trade, and the only time that there's going to be money on the line, is when price does what? Well, when price decides to shift in momentum and eventually trigger me into that trade. But once the momentum shift kicks in, I know that there is a higher chance of the market continuing in my direction based on my pre-analysis, because guess what? When there's volume, and more often than not, the market will continue in the intended direction that the market wants to go. So here's another example. Removing emotions and the psychological barriers that you may face by entering a trade too early and then seeing it move sideways, that will then eventually alter your decisions, make you close your trades early, make you add to your positions, just making you do really silly things. So personally, get triggered in when the market shows good signs or strong signs of momentum, and then just go from there. Let's take a look at one final example. So the final example, we're going to take a look at CAD JPY. Now let's take a look at what's happening here. We can see the market has been pushing in a downtrend, making lower lows, lower highs, lower lows, and lower highs. Now look what's happening here at current price action. Price is failing to break above this for this moment in time. But now I'm not a supply and demand trader. I'm not a support and resistance trader, and I certainly don't want to jump into this trade based on impulse. So the third reason why I really like stop orders is because you can wait for candles to close. That means you allow the market to print more evidence and confirmation for you to identify if a level is strong or not. Taking a look at what we've just seen here, we have strong bearish momentum into this key level, a bullish candle, another attempt to push down with a failure, and look, we have a beautiful wick left behind. How do I want to enter this? Well, personally, I just want to see if the momentum is strong enough to break above some of these highs. If the market is going to continue to push up, then guess what? The market's going to continue to push up. And if the market is not, then I won't be triggered into the trade. Now, you can enter this more aggressively or more passively. It is really up to you guys. But the point is, the only time I want to be triggered is when the momentum shifts. That means once price crosses this line, I'm in the market. That will support that this triple bottom right here is holding strong, that the bearish pressure in the market is depleting and that the bullish pressure is clearly stepping back in. So with that being said, we set our stop order and we just simply wait. We don't suffer any drawdown into entering and instant execution. We just wait for the momentum shift. And as you can see here, that momentum shift has happened. Now, why is this good? Well, let's say we entered this here with an instant execution and this price action pushed all the way back down past this level. You would have just got a premature stop loss for no reason. Whereas with this stop order, you allow for price to breathe, to react from these levels, and to only trigger you into the trade when the momentum shifts. So taking a look at this, we could enter the trade if we see price reaction from this level. We can move our entry down here now because we have more evidence of the wick rejection, as you can clearly see here, with price reacting, and then you can go for your 1 to 3 risk reward ratio targets. Now, as I said, it's not always going to work in your favor that the price is going to push up and, you know, continue with that momentum, but you just allow for price to give you more support and evidence why you should take this trade. And with that momentum, more often than not, you'll see price rally your direction. So there are the 3 main reasons why I personally like stop orders. There are many other reasons, but I'll just leave that with you today. And I really hope that you've enjoyed this lesson. Remember, this is of my own opinion, so backtest it, see how you go, and obviously leave a comment down below. So I hope you enjoyed this video, guys. As I always say, please smash that like button, subscribe if you haven't, turn on notifications, and just remember, the key word for today is momentum. So if you pop that keyword in the chat within the first hour, I will select one person to join our morning market setups Zoom session that we do at 7 a.m. to 8 a.m. UK time, and you can be part of that. Keyword is momentum. Drop it below. Take care for now. Bye-bye.